This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Messer and Tim Stenivek from Bloomberg Radio.
Toast to the ones here today. Toast to the ones that we lost on the way. Cause the drinks bring back all the memories. And the memories bring back your. There's a time that I remember.
Well, it's Bloomberg Businessweek. Tim Stenivek and Bailey Lipschultz live in the Bloomberg Interactive Brokers studio. Shares of Micron Technology is up by, about 3.6% as we speak right now. The shares have rallied more than 60% so far this year. Worth repeating some of the news. The company maintained its quarterly dividend at 11.5 cents per share. The company is seeing second quarter earnings per share from 35 cents to 21 cents. The consensus was 62 cents per share. Let's get an instant reaction from Dan Morgan. He joins us this afternoon on Skype. Dan, good to have you back with us. He's Senior Portfolio Manager, of course, at Synovus Trust Company. Love it when you join us whenever we have the chip companies report. Micron Technology, you've had 5 minutes to look at the company's results. The shares higher in the after hours before that call takes place. What are your immediate reactions?
Well, Tim, I think overall, obviously, it has to be construed as a very strong beat. I mean, the numbers were kind of moving around on the first quarter. We know they originally came in on sales at $4.4 billion with plus or minus $200 million. Then they raised their guidance to about $4.7, and then they beat that number at $4.73 billion. That was up 16% on the first quarter. They also guided, as you probably mentioned, going into the second quarter, $5.1 to $5.5 billion in revenues. Street was looking for 4.99. And then on the bottom line, it was a beat across the board in terms of they didn't lose as much money as everybody expected, right? In the first quarter, they only lost 95 cents. And then going in the second quarter, they're looking for a range of a loss of 21 to 35. The Street was looking for a loss of 62. So, just a preliminary look at these numbers, Tim and Bailey, they look very, very strong. And it reiterates and gives further evidence that the rebound that began in the February of 2023 in the chip industry is definitely gaining momentum. We're starting to see that in the memory space.
And with that momentum, what's going to be key in 2024? I'm just looking at the results. AI, obviously, and the spending around that as it relates to data centers is helping. Is that what's going to carry Micron and some of those chip-making peers?
I mean, AI is important for them. Probably not going to see that come to fruition until sometime in the second half of next year. They have two products that they currently are working on. One is called double data rate, DDR. The other one is called high bandwidth memory. Those are chips that go into some of these high-end AI data servers that you would see, let's say, with an NVIDIA chip going in there. That would be the memory that would go into that server with the NVIDIA product. So that's definitely a big demand cycle for them. The other thing, we're seeing, guys, is we're seeing a rebound in PCs, and we're seeing a rebound in regards to smartphones, which is about 31% of the total chip market. So those were two areas that were really hurting. We had auto and industrial that were previously strong, but we're seeing a nice bounce back after we had that big blip on the upside after COVID.
Hey, I'm looking at FAGO on the Bloomberg terminal, and it's got a great breakdown of where Micron's revenue actually comes from. So in the fiscal 2023, about half came from the U.S., half internationally. And then when you break down, Dan, international, this is the point Scarlett was making, you had 17.4% of revenue coming from Taiwan, and you had 14% of that revenue, or 14% of the 49% of revenue, international revenue, coming from mainland China, excluding Hong Kong. What do investors need to understand when it comes to the China story and Micron?
What's interesting is that Micron doesn't have a huge amount of exposure to China. I know that everyone's talking about the restrictions, and that was a big issue that's going to come up on the conference call.
17.5% isn't nothing.
Well, I know, but compared to Qualcomm.
Or 14%, I should say.
Yeah, Qualcomm has almost 60%. That's what I meant when we compare it to other chip companies. But yeah, I mean, that's going to be the real, gorilla in the room as we get into this conference call coming up with the management team. I'm sure the analysts are going to really kind of want to zero in on, how much of impact is that going to have in their ability to kind of continue to replicate some of the success they had in this first quarter in terms of recovery. And, you're right. I mean, you take out a certain chunk of that revenue, that's huge, and that's part of that recovery story. I guess what I was trying to relate it to is when you look at Micron compared to a lot of the other big chip makers, especially Qualcomm, they have a pretty low exposure to China. But you're right, it's still a pretty high amount of their business when you're looking at 15% plus.
So should investors be worried about regulatory risk, about the U.S. cracking down on those sales?
Well, I mean, it seems like there's regulatory risk now, guys, in all of these chip companies, right? And even Apple. So that's always a risk that's out there. So far, it hasn't really had a dramatic impact. Like, for example, NVIDIA has a couple of their chips that have been banned, and they've been trying to work around it with some chips that meet the specifications in terms of these concerns that China has raised. They're able to sell in those spaces. So far, I haven't seen dramatic impacts in terms of, bringing down sales and earnings estimates because of the China exposure with the chip players. But it is definitely something that could become a problem down the road, and it could be something that would kind of throw a stick in the spoke of the wheel here of this great recovery that we're getting in the chip space.
And Dan, I'm just looking at the release and some of the comments from management, basically talking about business fundamentals improving throughout 2024, but already talking about record industry TAM for 2025. Is that at all a concern or surprise to hear and see companies already looking to 25 when we haven't even flipped the calendar to 24?
Well, I think everyone's looking forward to this recovery coming to fruition. And, as you start to move out of the hole that we had in probably about the first quarter of 23, how long is a typical chip cycle? Typically, they don't last that long. So I think you're seeing already people kind of building in that we'll continue to see the recovery through this year as it continues to work into some of these other spaces I mentioned before, like industrial and auto. And then the question is, when does this peak out and we start to go the other way? And, how can we forecast that? And how much carry through will we have? And will China be a catalyst that leads up to this turn again in the cycle? So, again, everyone kind of looking ahead, right? Everybody trades these stocks on what's going to happen 6 months to 12 months down the road.
As if we could know what's going to happen 6 to 12 months down the road, right? I guess that's what
Tim knows,
makes a
but
market.
he's just not going to tell us.
What's that?
I said Tim knows, but he's just not going to tell us.
Exactly. That's why I'm doing this, because I can see the future.
Yeah, exactly.
Hey, Dan. To that end, talking about the AI impact here, it's something that the company CEO calls out quite a bit in the press release this afternoon, and I'm wondering where you think we are in terms of value capture from the AI rush, specifically for Micron. Like, how much more room is there to run when it comes to AI?
I think that's a great opportunity for them going forward. I mean, there's been a lot of studies out that have kind of thrown some numbers around. For example, in 23, they expect total DRAM revenues from AI to be about 16%, and then by 2027 to expand to 56%. And then along the way, obviously, you're creeping up in terms of overall revenues being generated from AI. But to me, that's probably the biggest opportunity. I talked about earlier in the conversation about how these chips are paired up with a lot of these NVIDIA AI chips. And, NVIDIA continues to do extremely well. AMD's got some new AI products coming out. So I think that's going to be the greatest opportunity going forward, just because you guys know that the memory market is extremely cyclical. It's a very commoditized industry. They have to compete against Samsung and Atmel and all these other players in the space. So it's a tough sled. So how do you carve out an opportunity for growth for yourself? And that is to align yourself with some of these AI chip makers and continue to garner a larger share of that overall AI memory space. And it's obviously going to be a huge growth component within memory, which is huge, right? Takes away some of the cyclicality that we typically have in PCs and servers and smartphones and the other things that are out there that obviously create this up and down cycle in memory.
Yeah, Dan, we only have about 30 seconds left, but looking at the charts, NVIDIA up more than 200%, AMD 110, Broadcom had doubled so far year to date before pulling back a bit. What stocks do you like within the semi space?
Well, you mentioned a lot of them. I mean, obviously NVIDIA is a holding of ours. Qualcomm, they have the A100 chip that should go into smartphones. We like Broadcom. They reported a couple weeks ago. They had a pretty good report. They mentioned some of the strength they're getting in their Jericho 3, which is their AI offering in terms of growth. So those would be some of the names, that we've been kind of focusing on. TI's in there too, but they've been a little bit underwater with the auto industrial space being so weak. But those would be some top names that you just mentioned that we're currently on our buy list.
Dan, we love it when you join us. Usually it's on days when chip companies report earnings, and that's been quite a bit recently. Really appreciate it. Dan Morgan, Senior Portfolio Manager at Synovus Trust Company, joining us on the phone from Atlanta. This is Bloomberg Businessweek.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Well, you saw the alerts last night. Donald Trump ineligible to serve as U.S. president because of his actions inciting the January 6th, 2021 attack on the U.S. Capitol. That's Colorado's highest court's finding. This is an unprecedented ruling that's headed for the U.S. Supreme Court, no doubt. Here's what happened. Colorado's Supreme Court issued this ruling late Tuesday, which barred Trump from the state's March 5th primary ballot, but stayed the decision to allow the former president to appeal, which his campaign said he plans to do. He has until January 4th, by the way, under the state's court ruling. It's a legal story, but it's also a political story with wide-ranging implications for both politics and legal stuff. For the legal side, we turn to June Grasso. She's Bloomberg News legal analyst and host of Bloomberg Law, weeknights at 10 p.m. Wall Street time on Bloomberg Radio. To find out all the legal stuff, you just listen to June. For the political side, we turn to Jodi Schneider, political news director at Bloomberg Television and Radio. She joins us from our Washington, D.C. bureau. Jodi, I want to start with you to get the politics side of this. What's the sort of day two here with the other Republicans and with what Trump is saying about this ruling?
Yeah, it's not a terrible surprise from the former president is basically saying that this is something that has been concocted to try to keep him out of the race and blames Democrats. What's more interesting to me is that the other candidates in the race, people who are running against him for the Republican nomination, they're singing that same tune. And they're saying they would rather win at the ballot box than via the courts. So the Republicans, including Republicans in the House, have really been standing with Trump in this.
And Jodi, I'm just looking through Bloomberg News Morning Consult poll from last week had Trump leading Biden by 5 percentage points among registered voters in head-to-head matchups across 7 swing states. Colorado had voted for Hillary Clinton and Joe Biden the last 2 elections. But when you look at this decision, what can it mean for the presidential election given those polls?
Well, the polls it's still early. And a lot of people are focused on the polls about the primaries. The general is still 11 months away. So there's 2 ways to look at this. If Trump wins, and he may well at the Supreme Court, he nominated and got several of those people on the Supreme Court who are now serving, that he will get some, credence with Republican voters. But where he really needs to win is in those 7 swing states. And it will be hard for him to win with just the Republican base. And how does this look to some of those independent voters?
June Grasso, come on in here, legal analyst for Bloomberg News, host of Bloomberg Law, weeknights at 10 p.m. Wall Street time on Bloomberg Radio. What did the Colorado Supreme Court decide here?
So the Colorado Supreme Court decided that, and this has been sort of a legal debate that was started by some conservative scholars, actually, whether or not under Section 3 of the 14th Amendment, which was passed around after the Confederacy to prevent Confederates from getting into taking office, whether the language in it, there's a couple of problems. always a couple of problems. First of all, it doesn't talk about what an insurrection is. It doesn't say what it means to engage in an insurrection. So that's a question that's open. And also what it says, the language is that officers of the United States who take an oath to support the Constitution. It mentions some officers. It doesn't mention the president. So that's another question. Does it apply to the president? So in this case, the lower court found that, yes, there was an insurrection. Yes, Donald Trump incited that insurrection, but found that Donald Trump was not, that the presidency was not one of the offices that you could, that take place, or that one of the offices that Section 3 of the 14th Amendment applies to. The Colorado Supreme Court said, yes, there was an insurrection. Yes, Donald Trump incited it, but the 14th Amendment, Section 3, does apply to presidents. And if you look at the history, it makes sense that it would apply to presidents, because someone said to me, well, Jefferson Davis, does that mean that he could have run for president because the 14th Amendment didn't apply to him? So it sort of makes sense historically.
So what's the legal route that President Trump could take now in order to get back on the ballot?
The Supreme Court is the only route. I mean, this is a question.
He can't appeal the Colorado Supreme Court decision at the level of the Colorado Supreme Court.
No, that's the highest court in Colorado. So the next, it's not like New York where we have the Supreme Court is the middle court. He has to go to the Supreme Court. And, the justices here on the Colorado Supreme Court knew what was going to happen because they gave him enough time to appeal to the Supreme Court. And also the language in this more than 200-page opinion was full of terms about how they know how significant this is. They know it's unprecedented. And, it's going to be in the Supreme Court's hands whether or not to take the case, which most people I've spoken to say, there's really almost no choice. The Supreme Court has to take the case because, otherwise what will happen in different states across the country, we're going to have some states like Minnesota, the Supreme Court there said, no, this doesn't apply. Any party member, any party can put whoever they want on the primary ballot. So what's going to happen with the primaries? What's going to happen with the election itself? So I think that all bets are the Supreme Court will take the case.
And Jodi, you mentioned this about the GOP and candidates that Trump is running against standing with him. Is there a route that this would play into his hands in any way?
Well, I think certainly the former president is very good at taking things that happen outside the political arena, for instance, in the courts and with his indictments and charges, and turning it into part of his narrative. And the narrative is the Democrats are afraid of him and they don't want him to be the candidate. And some in his own party don't want him to be the candidate because he could win, and they know that. And he will certainly make this case, or try to make this case with this as well. Again, because this is the narrative that they are against me, they are victimizing me, they are using the judicial system where they control it to try to get at me. And in this case, he will probably, he has working with him in terms of trying to make that argument, the fact that all of the members of the Colorado Supreme Court were appointed by Democratic governors.
And
so,
however,
so he will make it political, even if it is not entirely political. He will not make it about January 6th entirely. And that is something, interestingly, we haven't heard a lot from, and those supporting him on this, the Republicans who were supporting him, saying this is about not using the courts to decide who gets on the ballot. They haven't said a whole lot about the insurrectionist claims.
And just to following up on that point, yes, he will say that it's all political, and yes, the justices were all Democratic appointed, but it was a 4-3 decision. So 3 of those justices, including the Chief Justice of the Colorado Supreme Court, voted against using the 14th Amendment.
And June, we only have about 40 seconds here. State courts, correct me if I'm wrong, Minnesota and Michigan ruled against similar lawsuits. What could this mean for other lawsuits from different states wanting to remove Trump from the ballot?
So they would each go their own way, but the Supreme Court will decide whether the 14th Amendment applies. But this is under Colorado law, so that's sort of a question of law that I cannot answer in 40 seconds.
All right. Well, we appreciate you trying. Thank you so much. A big thank you to June Grasso. She is Bloomberg News legal analyst and host of Bloomberg Law, weeknights at 10 p.m. Wall Street time on Bloomberg Radio. And also a huge thank you to Jodi Schneider, political news director at Bloomberg Television and Radio. She's now based in our Washington, D.C. bureau, where she joined us from this afternoon.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Yeah, Tim, as worries around the pandemic faded, consumers took to the skies with airline traffic more than doubling its COVID-era bottom as the travel industry for business storms back, while the jump in travel to see Taylor Swift or Beyonce dominated headlines. I don't know if you made a trip out to see some of those cities, but those cities benefited vastly from those concerts. Calendar for conferences, though, and conventions are now packed. Next month, we have CES in Las Vegas, JP Morgan Healthcare Conference in San Francisco. Flick ahead to March, you have South by Southwest taking over Austin. As meetings and exhibitions bring in millions for host cities, better diversity and equality at these events is something that's critical for them. That's why we're talking with Jason Dunn. He's the CEO at National Coalition of Black Meeting Professionals, joining us now on Zoom from Cincinnati. Jason, your organization is an advocacy group that promotes the positive financial impact of travelers of color. How does your organization work to improve the diversity of these meetings, and what can that do for the events as well as the cities hosting them?
Well, I appreciate that, and thanks for having me. Well, two things. One is our organization was created 40 years ago this year, and the focus was always to empower, educate, and influence policy of Black professionals, own hospitality, and Black travelers. And what that means is that we gave the value of what conventions and Black leisure travelers give internationally and domestic, and that number is $129 billion. And so our founders were frankly around the table and said, how do we benefit this, and what can we do to make sure that cities who are diverse, cities who are progressive, cities who are in tune with the changes of the demographics gain or earn these dollars. And we understand that the $129 billion that we bring to destinations also are recycled and also influence jobs, influence policy, in addition to the quality of life and retaining talent and bringing corporations to destinations who believe in diversity. And that's what we've been talking about. That's what we've been doing for 40 years, and we've been successful this far.
Jason, where are some of the target cities that your organization has its eyes on? I mean, where are the cities that are doing a good job of this? And maybe the targets aren't necessarily cities that are doing a good job, but that could be doing a better job.
Well, I think there's a couple of things. One is there are cities whom have done great over the past years. There's your regular metropolitan cities like New Orleans, Detroit, Washington, D.C., Atlanta, Cincinnati to some extent, and Cleveland and places like that. But also there are cities who are evolving, who understand that in order to retain diverse talent, in order to retain or gain corporations, and in order to help with the commerce of a destination, that they have to be more diverse. And we're seeing people, cities like Austin, Texas, who has welcomed Black Tech Week, and Black organizations who are in technology have went there as well. And cities like Orlando or Miami, who are recognizing the international flair that our organizations bring and our leisure travelers bring as well.
And Jason, you joined NCBMP in November last year from Visit Cincinnati. What changes have you been able to implement in that 13-month stretch, and what does 2024 look like?
Yeah, I appreciate that. So I think for us, we have been more excited about widening our base. So it's not just conventions and meetings, but also sports. Many of our members are in sports and have, in fact, one of our members have the largest kickball tournament in the country. I laughed too when I really got the data about that too. So like, wow, really? And
I've never been to a kickball.
I know. Now I want to be part of that.
I thought you were going to, Jason. I thought you were going to talk about Cincinnati FC. I mean, what a season! What a season you guys had.
Hey, listen, Hey, I'm with them as well. But we're talking about the members. Okay. And the members are vast and wide, and many of our associations and organizations are in every single market. Again, not just conventions, but also the sports and entertainment. And you referenced Beyonce. So Beyonce would not go to destinations whom are not welcoming. And so those are the things that we kind of in the background have advocated for, and saying that if you want these dollars, you have to show diversity. One, and two, you have to be welcome and being a progressive site. And so we've done that and doing that consistently. In 2024, we're focused on building that bridge internationally. We know that that Asia and Africa specifically are destinations for our members who want to create that international flair. And we know that as the country and the world is more global, we have to be in those discussions and meeting and understanding what's around the world. And that's what we're doing now in 2024.
And Jason, you mentioned Black U.S. leisure travelers spent nearly $130 billion on domestic and international travel. That was back in 2019. How is that evolving since the pandemic, and what factors are playing into how travelers are selecting their destinations?
Yeah, so I thanks for that. So again, welcoming policies, one, two, people are frankly being more stingy with their time and more strategic in where they're going. And so I believe that, and also travel has eased up as it relates to prices. So it's not as expensive to travel as it was before. So people are taking purposeful destination trips, and conventions are going to places where they want to grow. And so to be relevant, you have to have a global kind of conversation, a global interest. And then many of our associations are looking at the world, not just the nation. And so I think as we begin to broaden our scope, we talk about what those interests are. We talk about how tourism ties to development, how tourism ties to jobs, and how tourism ties to economic sustainability for destinations. Everybody's aligned with that. And so people are being stingy with what they're talking about. They're being stingy with where they're spending their money, and they're purposeful on where they're going and how it aligns with their personal values. And so that's what we've seen in the past couple of years since 2019, since the study was happening.
Well, have conferences completely recovered since the pandemic? Because there was this big concern for airlines that, business travelers who pay more because they buy tickets at the front of the plane, and they buy tickets during the week, and they buy tickets, only a few days ahead of time. So they spend more money with airlines. There was a concern that people were going to be using Zoom and Google Meet and Teams or whatever for meetings instead of going to these conferences. Are you seeing that, or have conferences overall completely recovered and then some since the pandemic?
Yeah, so I would say in different segments, we see recovery. Our particular markets are recession-proof. And so what that means is that we're going to meet because our organizations are steeped in tied to social justice, tied to economic development.
Recession-proof, but not necessarily pandemic-proof.
You are correct.
Because I'm not talking about recession. I'm talking about, just a change in habits post-pandemic with people not traveling as much.
Yeah, no, you're correct. So what I was getting to was that there's a balance. So each organization had to shift. And so, yes, there is the virtual piece, which is more convenient for people to move back and forth, but also it forces conventions to be more purposeful on why they meet and what they're offering people when they come. And so the numbers, yes, have come back, but we've seen growth in several categories as it relates to larger conventions versus international, national versus domestic. And so those things have balanced out over time. But yes, we see a positive trend that conventions are coming back. Yes, the people are, the hybrid meetings have been more welcoming than they were before. And then there's a balance on content that brings people to conventions versus why they've been in the past. So I think it's very purposeful, and people are intentional about why they travel, where they're going, and who they're going to meet.
Jason, we got to leave it there. Jason Dunn is Chief Executive Officer at the National Coalition of Black Meeting Professionals, joining us on Zoom from Cincinnati, Ohio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Nice music choice, Paul Brennan. Well, as we mentioned, the forthcoming issue of Bloomberg Businessweek, it's on newsstands tomorrow. It's the longevity issue. It tells some of the stories of the billions of dollars that are being spent to live longer or age slower in the never-ending quest for the fountain of youth, or to be forever young. Stories in there also delve into the science behind the concept and how researchers are making headway when it comes to longevity. And that's where the cover story comes in. It's by Kristen V. Brown, healthcare reporter for Bloomberg News. She writes about how the biggest breakthrough in longevity may start with menopause. As I mentioned, this story is in the upcoming new issue of Bloomberg Businessweek. You can pick it up on newsstands tomorrow. It's already online at Bloomberg.com. Businessweek and on the Bloomberg terminal. With more, we are joined by Kristen V. Brown, healthcare reporter for Bloomberg News here in our Bloomberg Interactive Brokers studio. The story starts with mice.
With mice, yes.
How do they play into this?
Well, so mice, as many people may know, are a very common model animal in scientific research. And this scientist in particular was giving mice ovarian tumors to try and figure out whether a hormone called AMH that both men and women produce lots of, whether that hormone could treat the ovarian tumors. And when he did that, he gave them this AMH gene therapy. And when he did that, he realized something incredible was happening. Whether they actually treated the tumors or not, I don't know. But one thing they did do is make the ovaries of the mice shrink. He said they looked like the ovaries of newborn mice. And what that suggested to him was that it was almost like a reverse aging process, that this hormone reversed the aging of the mice's ovaries. And as anyone with ovaries knows, as your ovaries age, they age much faster than the rest of your body, and eventually that means you can't have a baby, eventually go through menopause, which is horrible for many women. So this indicated that he might be onto something huge, something that could really solve a lot of problems that women face as the reproductive system ages.
And are we seeing this AMH or other types of science being used in more advanced animals, like more similar animals, cats, dogs?
Cats, yeah. You must have read the story. I was very excited to get a cat reference into this story as a crazy cat lady. So AMH could have a lot of potential uses because it does have this really powerful sway over the whole reproductive system. And so his first thought was actually, well, maybe I could make a better birth control with less side effects. And so he decided to test that in cats. And in cats, it's a permanent birth control. Instead of removing their reproductive organs, they worked with the Cincinnati Zoo and they gave cats this AMH gene therapy similar to what he gave the mice. And the cats were no longer able to get pregnant without having to lose their reproductive organs, which is not a pleasant experience.
So how can scientists and researchers extrapolate what's happening in the ovaries and apply that across a broad spectrum for longevity?
Right. So what's really interesting about the ovaries, beyond just the idea that you might be able to slow menopause or extend a woman's number of fertile years.
Two things which would be absolutely
incredible on their own. Incredible on their own.
Medicine.
Yeah. But so it's really hard to study aging in general because there's not a great, we can study it in mice, but how similar are mice really to humans, right? We can only learn so much about aging in humans by studying animals that age much faster, right? A mouse has a much faster life cycle. So it's better to study these things, but it's not similar enough to humans to really know how it would do in humans, how these therapies would do in humans. But the ovaries, they are a human organ. And they happen to be a human organ that ages at twice the rate of the rest of the body, but it also ages in a very short period of time. When a woman hits her 30s, her reproductive system starts, all of a sudden, her ovaries in particular, start aging very quickly. So you could test these therapies, these longevity therapies that people think might intervene in aging more broadly, right? Not just in one organ system like rapamycin. You could see if it has an impact on the ovaries. And that's a much better indication in some ways of whether it might have an indication in humans for longevity than by studying mice. So it could be a really great sort of testing, proving ground for other therapies.
What's the funding dynamic right now? I know it's been a long story about women's health not receiving the funding or the share of funding that you would expect. How does longevity and the potential for longevity play into that?
Oh my gosh, this is one of those things that any woman who reads this figure are like, what? That if women were not forced to be included in clinical trials in the United States until like very, very recently. I think
that's so crazy.
Yeah, I think it was 1993?
1993, yeah.
1993, thank you. I don't have it in front of me. Yeah, that's so recent. I was in kindergarten then, before they started including women in clinical trials. And that's because there hasn't been interest in women's health, but there's a lot of interest in longevity, in lots of people in Silicon Valley wanting to live forever. And so once you cast the problem of the ovaries as a problem not just of women's health, but of, health for everyone, all of the major diseases are diseases of aging, right? Heart disease, dementia, they're all diseases brought on by aging. So once you cast the problem of women's health as one that's related to that, there's been a lot more interest in funding startups and funding scientists who are doing this work.
Based on your reporting and what you saw reporting out this piece, how promising is the research that's being done?
Well, it's promising enough that I have convinced myself I'll never have to go through menopause. I'm 37. I don't know how realistic that is. But I do think that there's really, really promising work that is starting to enter human clinical trials. Not the mouse stuff. That's not quite there yet. That's a couple years away. But there's some researchers at Columbia who are doing something with a popular anti-aging drug called rapamycin that is entering trials now. They're enrolling people. And so I think that while we may not have a way to pause menopause, anytime soon, I do think that we will very soon out of this research have better indications of how to treat infertility, of how to treat the symptoms of menopause when people are going through it. So I think that this work is very promising in that regard, in that for the first time in a very long time, we're having interest in just looking at the basic biology of female reproduction and understanding how it works. And I think that's going to lead to many very big breakthroughs.
And Kristen, this may be a dumb question. In terms of a clinical trial, though, if you're treating cancer, you can at least compare a placebo versus someone who's on a drug and how much longer they live. How do you study the reproduction, like the women's reproduction, and whether these work or not?
That's a good question. Well, so in previous studies, they have looked at some of the signaling in the ovaries of women who are slightly older, right? Like 40s, late 30s versus younger women. And you can see the rapid decline. So if you know what to expect at different ages and you looked at a large group of people, then I think you could see whether obviously there's variation from person to person, but I think that you could see whether it's looking more like what you would expect of a younger ovary, for example.
And
go ahead, Bailey.
No, I guess coming back to the timeline, drug development's risky. It's expensive. Are there companies that are funding, or are a lot of these studies being done at universities? Yeah,
both. There's some companies in the space. One of the big companies that I write about that came out of the guy doing the amazing mouse work, Oviva, they say that their first therapy, which will be for infertility, is a couple of years away from clinical trials, and their second therapy is maybe a couple years behind that. So I mean, which is not a long time in the time scale of clinical trials. So there are companies that are working on bringing this stuff to the clinic soon.
Kristen, you made this comment that stuck with me, which is in Silicon Valley, a lot of people are interested in longevity, and that's certainly what we see. And we talked to Ashley Vance yesterday, who had the chance to go and visit this lab and startup that has $180 million in funding from Sam Altman, a huge figure in Silicon Valley right now. Do you think we're to the point where the idea of longevity, the study of longevity, the search for the fountain of youth has gone beyond these tech billionaires?
Yes.
And is now more widespread?
Yeah, I definitely do. And I think that you have to separate the people who want to put their brain in some kind of freezer box and then in a computer later or something, those guys, the sort of transhumanists, from the people who really want to understand the biological mechanisms at the root of aging, because we really don't understand so much of why aging occurs, right? Obviously, time, environment, it wears on the body, but once you begin to unpack at a molecular level what's happening, then you can certainly intervene in it in some way. How much effect we can have, who knows? But I think that we're starting to see interest in not just the sort of pie in the sky transhumanist Silicon Valley billionaire stuff, but the stuff that's doing the basic science that will one day lead to better drugs, better therapies.
Well, it makes me have the question about the way that drug companies approach this, which is treating things that lead to death, things that you mentioned in your article, cancer, heart disease, trying to solve for those things rather than solving for preventing those things? It's like two different approaches here.
Yeah, it's two different approaches, and I think a lot of that comes down to it's hard to know, like we talked about why the ovary is such a good model for this, right? How do you know if your aging therapy is working? You have to follow people for a really long time, which doesn't mean they won't happen eventually, right? But in drug development, a lot of what happens is we figure out something works, but we don't know why it works. With aging research, we're trying to figure out why do things stop working, and then how do we intervene in that? So it is fundamentally two different approaches, and I think that they're both valid, right? But to intervene in aging, I think we're really going to have to understand the fundamental basic biology here, which is stuff that takes a lot of time and a lot of money.
Well, one of the numbers that stood out to me was in the story, you have that the market for longevity drugs could reach more than $44 billion within the next decade. I look at everyone wants to talk about GLP-1s, and that's a $100 billion market value. So I'm surprised that there's not more funding and more of an advancement from private equity venture capital, given that, I mean, it's more than double, but that's not a small pool of money, right?
Yeah, it's not it's not a small pool of money, but I think that the time scale and how hard it is to know whether it's working does make it a riskier intervention versus weight loss. You either lose the weight or you don't. So
it's a lot easier. Everyone's on it. Yeah,
everyone's on it.
So we're told. So I hear. Okay, we only have a couple minutes left, but I wanted to make sure to get to other stories that you've written recently because you've been very busy. It's not just the cover story of Bloomberg Businessweek. You also have a story out about sick shaming, pushing Americans to take too much cold medicine. We were talking about this during the break, and it's like, what's going on here? Because when we were in, quote unquote lockdowns, when we were all working from home, we were never sick. Now everyone's coming back to the office. Kids are back in school and daycare. I'm sick all the time. And we're just like mainlining Sudafed? Is that what's going on?
Yeah. Okay. So this story actually came out of a personal experience of my own. I've started just carrying around cough drops, and I take them all the time, even if the reason I have a cough is because I swallowed something weird, or it's wintertime. It's very dry in the Bloomberg offices right now, so it makes my throat always dry. So I just pop cough drops even when I'm not sick.
You're good to know that I can go to you for cough drops.
Yeah. I have a huge stash in my desk, so come on by. And I started to wonder, are other people doing this? Is it good for you? It can't be good for you to take this many cough drops. I mean, the calories alone, right? Gotta add up. That's why you need the GLP-1s. Anyways, so I looked into it with a great reporter, Kaylee Lapara, and we found that absolutely you can take too much cough and cold medicine. It is not a good idea, and that this is a thing that is happening. People feel pressure to go to work, to go to Thanksgiving dinner, to go to happy hours, even though they're not feeling great, but they don't want to have people looking at them, giving them that look like, why are you here even though you're sick? So people are just doing what I'm doing and taking tons of cough medicine.
Just looking at some of the numbers, I mean, U.S. sales of upper respiratory over-the-counter medications up 23% to almost $12 billion in the 52 weeks through early December.
Great for them, bad for us. Bad for us.
Yeah, totally. I mean, I feel like I'm coming down with something just talking about this.
You probably got it from me. Yeah. Just kidding.
Well, I'll get some cough drops from you, okay? Hey, check out all of Kristen's stories available on the Bloomberg Terminal and at Bloomberg.com, and pick up the new issue of Bloomberg Businessweek. It's the longevity issue on newsstands tomorrow. It's already online at Bloomberg.com/Businessweek and on the Bloomberg Terminal. Kristen V. Brown is healthcare reporter for Bloomberg News, joining us this afternoon in the Bloomberg Interactive Brokers studio. This is Businessweek.
I'm driving in my car, I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
We're seeing a little bit of a sell-off, as you just heard from Charlie Pellet, down 1.1% on the S&P 500, the NASDAQ down 1.2%, the Dow down 0.9%. Late day sell-off here. are just under 18 minutes from the close of trading on this Wednesday afternoon. Let's get to Alan Zafran. He's the founding partner and co-CEO at IEQ Capital. He joins us on Zoom from Foster City, California for our drive to the close. Alan, it's been a bit of time since we spoke to you. How are you?
I'm doing just great. Tim and Bailey, thanks for having me on your show today.
Well, thanks so much for joining us. Hey, I know a lot of your focus is alternatives, privates, real estate, but I do want to get your thoughts on the equity rally that we've seen since October 27th. Look, today notwithstanding, we're still up about 15% since then. Is this warranted?
Well, it's warranted if you think we're going to get this proverbial soft landing. I would tell you we remain a bit guarded or cautious. If you look, the entirety of the move is based on the fact that the Fed is going to be cutting rates next year. And what's different is the Fed has told you they're going to cut rates 3 times, 25 basis points each. The market's built in an expectation they're going to cut rates 6 times by 1.5%. That might be a little bit too ahead of itself. So our view is it's difficult to grow profits at 12% for 2 consecutive years in an environment where there's still a lot of challenges in the economy. We are a bit skeptical that earnings will grow quite as much as the markets have forecast. So we think this overbought rally is a bit ahead of itself.
How much ahead of itself?
You know, let's talk about valuations. You get to somewhere around maybe 5 to 10% ahead of itself, not 20 or 30. The market's trading right now at just under 19.5 times forecasted earnings. If you look in the last 20 years, the market has traded a little less than 19 times forward earnings. If you look over 25 years, the market's traded about 17 times forward earnings. So the market's probably a little bit ahead of itself with full anticipation that rate hikes are over, cuts are coming, but there's probably a bit too much near-term enthusiasm, albeit the long-term constructive view on the American economy remains the same. Equities are part of a well-diversified portfolio, and you can't deny that. You still need to have some equity exposure.
And Alan, with that in mind, what derails this? Is it the fact that the Fed may not provide double the cuts? Is it a recession? Is it inflation being more stubborn than people were expecting? What drives that?
What drives it is both directions. If the Fed is trying to thread the needle. So on the one hand, you want inflation to work its way softly down without mitigating complete denial of economic growth. On the other hand, you just don't want a recession. So what we need to see in particular is that wage costs as well as input costs come down enough that companies can actually generate profit margins. And yet at the same token, the speed at which consumers spend needs to still maintain some constancy. What we're seeing is credit card defaults are starting to creep up a bit. There's a concern that if unemployment rates begin to move up, that'll in fact take away from consumer spending, which is 70% of the economy, and therefore earnings won't be quite as robust as one might imagine. The art of threading the needle is, can companies still grow earnings something next year? In multiple states, these levels of rates are coming down. They probably can, but looking for another 25% up year in the S&P 500 is probably outlandishly optimistic.
Yeah, and looking at that diversification away, you mentioned equities being a part of a portfolio. High quality debt seems to be something that's very much in vogue. Where are you looking and where do you see opportunities for 2024 if we aren't going to see a continued move higher for equities?
I think it's barbelled. On the one hand, you absolutely want exposure to very high quality bonds, whether it's treasuries or investment grade municipal bonds. Yields are still very high relative to any 10-year time frame, and they're a nice diversifier under most conditions relative to risk on assets like equities. Conversely, given that short rates are so high, you can still access floating rate private credit type structures, even in the public markets through things like interval funds, which are just basically mutual funds that don't give you daily liquidity, but still allow investors to get access to floating rate debt across a wide array of companies that is yielding over 10% currently. So barbell. The middle, we're less excited about. Publicly traded day on, day off high yield bonds aren't quite as compelling because if the economy softens, typically prices of high yield bonds drop a bit, spreads widen. And right now it's probably not the right time to be in that component of the bond market. But the barbell is very high quality bonds to offset risk from equities and floating rate loans, particularly more issued to private companies right now, seems to be a nice barbell around a stock portfolio.
Alan, do you think we saw the top of the 10-year when the yields hit about 5%?
Yes, we in fact believe we have found that to be the case. The reason we believe that to be the case is we believe the economy is in fact going to slow from here. We do think inflation has peaked. We do believe the Fed will inevitably have to make some rate cuts. And the easiest way to think about it is when you buy a 10-year Treasury bond, it's the same as buying a 3-month Treasury bill, 40 consecutive 3-month periods of time. And a 3-month Treasury bill is more or less tied to the Fed funds rate. So if you think the Fed is going to lower its rates for the next year or so, and you think about where its sustainable rate is, it tells you that a 10-year yield is probably too high, or it was too high when it was at 5%. So in fact, we think now is an opportune time to have some of that exposure to longer term bonds, because we think those long-term yields have peaked back in October when the 10-year hit 5%.
Well, Alan, you mentioned stability. What does a stable 10-year look like?
What does a stable 10-year yield look like?
Yeah.
A stable 10-year yield is basically what a 3-month Treasury bill gives you, plus a modest premium for the fact that you're locking up your money for 10 years. So you have to work backwards. Where should a 3-month Treasury bill be? It should probably be somewhere a little bit around where the long-term Fed funds neutral rate is. A Fed funds neutral rate is effectively the short-term rate that enables for 2% inflation and modest economic growth without a recession. So the Fed believes that rate is somewhere around 2 to 2.5%. So maybe a 3-month Treasury bill is somewhere around 2.5 to 2 3/4%. You add on your premium for time, and maybe you're at a 3.5% long-term 10-year Treasury yield as an aspirational place to be. We're still in an elevated inflation level. So with the 10-year trading at around 4% today, it's actually 3.86 today. We're working our way down slowly towards that 3.5%. And of course, when you buy a long-term bond, you're also getting more income historically than you do with short rates. So we would argue we're working our way towards a stable 10-year yield. We're not quite there yet.
Alan, just about 20 seconds left. Just give us some details of what you think a recession in 2024 could look like.
Well, a recession in 2024 comes from the fact that it turns out consumers have overspent all their savings in a post-COVID high. They don't spend a lot of money when we get past the holiday season. And it turns out retailers and other service providers over-anticipate how much consumption would come. They'll end up having cutting jobs, which in turn further cuts consumption. That leads to an unfortunate spiral in a recession.
Alan Zafran, happy holidays if we don't connect between now and the end of the year. Really appreciate you joining us throughout the years here on Bloomberg Businessweek. Alan Zafran is founder and founding partner and co-CEO at IEQ Capital, joining us on Zoom from Foster City, California. You're listening to Bloomberg Businessweek, and this is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.